Hey everyone, welcome to another video. So in today's video, markets are down, but today in this video we're going to look at one stock which might potentially give us some decent returns, if not mega multi-baggers like all others proclaim on Twitter, at least some 20-30% returns at least in the short term to medium term. Now this company has not given returns since 2011 for investors. So that's why I find this company that it has very good chance to give us returns in the coming months and the coming years. But also this company is looking strong because while the markets fell on Friday and the last week, this company is showing some strength. The stock has gone up and this company is looking good. And that's one of the reasons why I'm recommending this stock today. But before we get into the stock's name and the technical analysis and fundamental analysis, if you do like my analysis and if you do like my videos and if it has helped you make money, then definitely hit that like button and also subscribe to my channel. Okay, but before we start the video itself about the stock itself, I'm also going to take a short overview, give you a short overview on Nifty and what is the current trend, and will the markets continue to fall further, or what's the situation and how you should be reacting. Okay, so let's get into Nifty, right? So Nifty itself has been going down while a lot of world markets have been crashing, especially the European markets have been affected really bad. For example, let's take the DAX. I'll just show you the DAX. I've also posted this on Twitter, so in case you're not following me on Twitter, do follow me on Twitter. So DAX, which is the Germany market, stock market, has been falling since that news of the Ukraine invasion, and it's been 2 continuous weeks of crazy fall, and this is across the European markets. But whereas the good thing to note is that the US markets and the Indian markets haven't fallen that bad. Right? If you see the Dow Jones index, which is the US market, it has been taking support around that major level of 33,000 levels. And if we break that level on a weekly or even daily closing basis, then we're going to head much lower. Right? Also on Friday, the Dow Jones has been able to kind of not fall and kind of reversed. So that's a good sign as well. So obviously the next question is, what is Nifty and what is Nifty going to do? Right now, while a lot of people can tell you that markets are not going to fall down, markets are going to head higher, I don't think anyone can exactly predict when the market will bottom out or when the market will reverse. Now, all we know is the trend is definitely down, right? So the trend is definitely down, and it's been down, and we've not, except for these 3 weeks, we've not had any good week where the markets have risen a lot, and all we've seen is red candles everywhere, right? And the red candles have been really strong. Now the only possibility that I see here is that Nifty is probably trending in a channel, and this might continue going forward, and I don't see this taking out anytime soon, right? So if you connect that 2 points and this 2 points here, you can see that Nifty is not, it tried to break down because of the gap down, but it finally managed to stay above that channel here. Now my prediction at least is going forward that if we close below 16,200, 220, 16,200 levels, then definitely that's not a good sign, and especially the fall might even get worse, right? And we might just follow the European markets and we might head lower. But the other possibility is that I see that potentially might happen is we might see that markets might head higher and we might go sideways for some time, and we might head to that 16,100 levels again, but it will be on the lower side, right? So it's kind of a sideways range market, which is what I'm expecting before we potentially break this and we head higher. Okay, so that's the case that I see for Nifty and the Indian markets. But before that, so investors are of different categories, right? So some of them are just SIP investors in mutual funds, some of them buy only good quality stocks, some of your traders. Now, depending on what kind of a style you have, for example, if you're invested in SIP, right, or you're investing in mutual funds only through a SIP mode, or even in stocks in a SIP mode, you should not stop that. This is the best time to get more units in your mutual funds. So do not stop your SIP, or no matter what. I potentially finally the stocks, Indian markets have a lot of potential and they'll just head higher. This might continue for a few months, but definitely long term SIP investors should not stop your SIP in your mutual funds. Second, if you're a long term investor and if you're looking for good quality stocks, this is again a potentially a good time, or probably a good time for you to buy good quality stocks in a staggered manner. Right, so if you, let's say you have your total capital is, or you have is 10 lakhs and you have 5 lakhs in cash, go into the stocks that you feel are good quality stocks and invest probably 1 lakh at this time before we see more fall in the individual stocks. Now remember also, most of the stocks have fallen down already, And that's also one of the reasons I see that, I think the fall, especially in the small cap and mid cap stocks, especially mini stocks, I think they might make a bottom, and some of the stocks might already start, going sideways before we head higher. So if you're a long-term investor in stocks, then yeah, it's a good time. Do invest in a staggered manner, but these are the best times for you to do. If you're a trader like me, a position trader or swing trader, then this is not the time to go heavily and invest in stocks. The market is not in a good state, so definitely you need to probably wait. I need to give the market some time before it stabilizes and before you see some strength in the index and in the small cap and mid cap space. Now, if there is no strength and if the market's going to remain weak, and if you're a swing or position trader, no matter what, your positions will tend to be hitting stop losses, or they'll not give returns. So it's better to invest probably 20-30%, but not go beyond that. Probably 50%, but definitely not beyond 50%. Stay 50% in cash and try to test the waters with the remaining 50%. So that's what you should. That's what you should be doing for the style that you have. So first define your style and see. Go back through this video, rewind this video, and see what I've said. If it makes sense, do let me know. If it doesn't make sense, also do let me know. I'm also willing to learn from you. And without further ado, let's go into the stock for today. So the stock I'm going to discuss today is TTK Healthcare, like most of you have seen, right? Now TTK Healthcare has been going up on Friday. It has been going sideways, and the markets have not been going sideways. Now, how did I find the stock? That's the first question, right? Now, most of you know that I use CCI 34 as indicator on the weekly time frame, on the daily time frame, on the monthly time frame, not below the daily time frame. So in the weekly time frame of this week's scanner, I did not find really some good setups. So when I look for setups, I look for some long-term downtrend changes, and I look for trend changes in the long term, right? And that's what I'm looking out for. And I didn't find anything in the weekly, but in daily scanner, which is a simple scanner, I've disabled all others, but if you want, you can add them as well. Latest CCI 34 crossed 100, right? So here, if you see, I found TTK Healthcare, which is up 10% almost on Friday, whereas we had a lot of other stocks also which are up 10%. Now, the only two stocks here that I might consider is Supetro and TTK Healthcare, of which I've shortlisted so TTK Healthcare, and I wanted to do a video on that. Okay. So as always, let's look at the fundamental analysis. Now, especially in these kind of markets, markets are going sideways or markets are going down. It's better to stay in stocks which are decently, which are fundamentally decent, right? Which have a good sales, which have good profits, and don't be invested in stocks which are not giving you profits and losses, which are not making profits and which are making only losses. Okay, so that's one of the reasons why also TTK Healthcare I've chosen. So if you look at the stock PE, it is trading around 27 PE, ROC is in 10, 15. So for me, it's already kind of decently valued, but because the ROC is around 10 and the PE is already 27. But historically, if you see, this company, has had a much higher PE. It was commanding PE of around 30-35 levels also at one point, right? That's also because of the low earnings, right? But the earnings have started to pick up again, right? So after this 2016 levels, if you see, the earnings have again started to pick up, and it's showing uptrend since the last few quarters. Since December quarter, the earnings have started showing an uptrend. Okay, and that's one of the reasons why I'm picking up the stock, and I feel that the stock might do well. Right now, everything in market is a probability, so that's why I said might. Now, fundamentally, this company is a very diverse business, right? So it is into the pharmaceutical business. 37% of the revenues come from the pharmaceutical business. Then you have around 28% coming from the consumer products division, and food business is 16%, and then it also is in the productive devices, in the scores condoms. It also brings in 15% of revenues from there, and medical devices 4%, which is negligible, right? Now, but the key thing that here I want you to note is it is having some of the brands which are really famous, like the Frames brand, like the Woodward's gripe water. Most of us as kids, we have probably consumed this, and it has some of the major brands, and it's a very old company, right? It has been there since 1928, right? So it's a very old company, and that's one of the reasons why I'm recommending this business. Fundamentally a decent company, if not a great company, right? Just looking at the quarterly results. So since 2019, the sales have gone up steadily, 160, 180, and they've gone to 206 crores to 212 crores. And the margins have also gone up, and they are having one of the highest margins at 8%. Now, that's not really a significant jump, but 7% to 8% of late has been stable around the 8% mark, right? And if you also see the net profit, it has hit 13 crores, 12 crores of late, right? So that's one of the reasons why I'm recommending the stock. The company is started to make some decent profits compared to what it has been making in the past. Okay, looking at the annual numbers, as I always do, sales also has hit an all-time high. So the trailing 12 months is around 771 crores. and again a margin of 7%. The operating profits is hitting an all-time high of 56 crores. It has never made so much of profits before, and that's the primary reason why I'm looking at this again. Right now, most of you might say that 46 crores in the PAT has come from other income. Yes, I went through the annual reports. This is coming from the fixed deposit that they have. The returns have come from there. That's how I check the annual reports. But overall, for me, a company which is growing its profits around 31% CAGR, sales is growing around 3% CAGR, not great, but definitely not bad as well. Right. Next is the reserves have also gone up. The debt has come down. The borrowings have come down to significantly almost zero. Right. So almost just 6 crores compared to 40, 30 crores that they had in the past. Right. That's also going to add to the bottom line because now they'll pay less interest, which means more profits. So the promoters hold a significant 75% share in the company. DIs and FIs hold very less, around 2%, 2.5%. And that's the fundamental analysis of this company. Now, I'm sure most of you would be saying, so this company has been not doing really well, or if you think that the company has some potential to do well going forward, if you see some triggers for this company in terms of fundamental, I don't really dive in too much, but if some of you might be doing that, do let me know in the comment section. Okay, now let's jump into technical analysis. Right now, technical analysis, as I always start from the monthly charts. So I looked at this from monthly charts perspective. Now, if you see, this company has been listed from 2015. So I just did a quick check on BSE as well, because TTK has been there for quite some time. So just checking that it's not been listed before in BSE and recently listed in NSE. So when I check that, I clearly see that it was listed in NSE before, and sorry, BSE before, and right now it's listed in NSE. So this company has not given returns since 2011. So if you see, the price is around the same level as of 2011, right? So that company has not done, was not given returns to investors since 2011. Also, I'm just going to walk you through historically what the stock has done. So this has been one of the major supply zones before, and the stock had a breakout. Then it moved higher. Then again, the stock had a major supply zone over here. It didn't go sideways. Now, in case you have not watched my demand supply video, definitely have to watch it. The link is right in the top right corner. Go ahead and click that link and watch that. Okay, right. So here, if you see, the supply zone was there. The stock did not head higher. Then it broke out, went higher, but then it went sideways. Then it came all the way back down. Now, see, look at the point from where it reversed. Right. So it reversed from this point, which was the previous demand zone prior to 2020. So the previous demand zone was here, and the stock is again it has broken out from the demand supply zone again. So that was a supply zone. It has broken out and it is trending sideways. Right now, I'm just going to go to the weekly charts to show you what the stock has been doing since the code crash. Now, since the code crash, the stock has come out of a downtrend. So that's a downtrend. Right, so stock has broken out of the downtrend here in August 2020, and then the stock has been going sideways. Now, what you want to notice here is this stock had a inverted head and shoulders breakout. So this is the inverted head and shoulders breakout back in April 2021. Right, so if you have not noticed, this left shoulder, the head, and the right shoulder. Right, and we had a breakout back in April 2021 with massive volumes. Now, this is one of the rules. Again, I've covered this in my inverted head and shoulders video. Again, the link would be there in the top right corner. Definitely go ahead and watch this video to understand what exactly the inverted head and shoulder is. And if you noticed, I said whenever there's an inverted head and shoulders breakout, keep the stop loss at the swing low and try to ride the trend. And after that swing low, it never came below that. It's just been going sideways. Now, again, this stock is not gone below that neckline. So that's the neckline, and the stock is now going sideways. Now, if you see, the stock has been taking support exactly around that neckline every time. Right, it's coming down, it's taking support again, it's going up, coming down, taking support again, and now it is trending in a rectangle pattern. Right, so I will also make a video on how to trade rectangle patterns. But now this stock, the supply zone is clearly around 825. Right, so 825, every time it goes up, it comes back down. Again, it goes to 825 here. Again, it comes back down. Again, it goes to 825, 830 levels. Again, it comes back. So the idea here is to buy the stock at this current market price, and I don't see this breaking this level, because even with the weak market, this stock has not broken down. That's one important thing to note. Definitely stocks, especially in a weak market, if the stocks are not going down, then definitely they have strength, which means they're defying the downtrend in the stock market and they're just going sideways. Okay, that's the reason why I'm looking at the stock today. Now, other thing I want you to notice is the CCI if you see, has again crossed around 100, right? It's around 132. And also the RS relative strength, right? Relative strength also I'll make a video. If you see, it's above the 52-week average. So relative strength has been going down, but now it seems like it's going to break out and it's going to head higher for the first time. Now that's also one of the reasons why I'm looking out to this stock. Right, CCI is above 100, relative strength is above 100. It is not the RSI. There's a clear difference between RSI and relative strength. Okay. So now how do we enter the stock? So we enter the stock. Again, a lot of you might be wondering in this weak market should I enter? So for those people who really don't want to take a risk at this point, enter the stock only above 830. Right, so 830 is the recent, 827 is the recent high, so 830 is a round number. So enter the stock only above 830 if you're very conservative. But if you're aggressive and if you're able to take some risk, then definitely I'd risk 0.5% of my capital and go long right now. Or if there's any dips towards levels of 600 levels, 650 levels, and definitely I'd buy the stock and keep a stop loss, around 600 levels. So 600 stop loss, you either buy at 830 or on dips towards 650. Okay, it's up to you how you want to do this, but definitely this stock needs to be in your scanner because of this beautiful base on base setup. So this is a base. Again, we have another base, and it's a beautiful setup on the weekly charts on the high time frame. So that looks definitely interesting to me. So I've given you when to buy, how much to buy. Don't allocate more than 5% of your capital in a weak market. Definitely not 10% right now. So around 5% of your capital, and if it does well, then you can allocate more, right? And stop loss is around 600 levels. Keep it and be a little conservative in this market because there could be a lot of stocks hitting stop loss. So that's the stock I wanted to cover today, TTK Healthcare. And if you did like this stock video, do let me know in the comment section. And don't forget to like and subscribe to my channel. And don't forget to share this video with your friends. Thank you and have a good day. Bye-bye.